This is Bloomberg Markets. I'm Scarlett Fu. We have fresh housing data today showing sales of new U.S. homes jumping in March, thanks largely to a surge in the South. But the outlook for housing overall does remain hugely dependent on macro factors, economic uncertainty as reflected in elevated mortgage rates and a softening job market. Let's get more insight now from Lisa Lippman. She's an associate real estate broker at Brown Harris Stevens, based here in New York. So we're talking more existing home sales than like new home sales for someone like yourself. What are you observing when it comes to the turmoil from the last couple of weeks and how that's impacting interest in purchasing homes?
Well, it's definitely put a damp on the interest. We had seen an uptick at the end of December that came into January or February. I think people were hopeful that the economy was really off to a good place. Also, we had a slow 23 and 24, and whenever we see a couple of slow years, we usually have a good year because eventually people have to move, right? They need more space, they have another child.
They've held off long enough.
Correct, exactly. So we really saw that happening, and then obviously with the tariffs and the stock market issues, it put a softening on it.
So, of course, this leads us to the next question, which is borrowing costs have remained fairly elevated because we've seen Treasury yields stay high. Are you seeing a lot more cash offers out there?
Yes. So since the interest rates went up a few years ago, we've had a lot more cash transactions. Obviously, New York City is a unique market. We have a lot of wealth here. The pockets are deep. People have made a lot of money in the market over the last few years. We've had a lot of transition of wealth from people over 65 to their adult children. Those children have been given money, and those people buy, they're adults, they buy homes, and those are often cash transactions.
Interesting. Okay. And what about the provenance of the buyers? In years past, we'd seen a lot of foreign buyers, particularly those from, say, China or parts of Asia or Russia. To what extent are those buyers still there, or have they kind of faded as the U.S. pursues this America First policy?
Right. So we lost the Russian buyers a few years ago. We continue to have Asian buyers, perhaps at a bit of a lower price point as it got more difficult to take money out of China. I can't tell you that I've seen many Asian buyers in the last month, but we do have Asian buyers. We often have Asian buyers who are also sort of buying homes for families where they're going to have a child or two or three go to boarding school and then university in the New York area or in New York City. And they want to buy a 2 to 3 bedroom home that's going to be for their children when they're in school and also for them to come to. That has continued. We also, though, have foreign buyers coming from places like South America and Europe. Despite some of the financial issues we're having now, New York is considered a safe place to live and a good place to live.
What about Canadian buyers? Because we've seen a lot of Canadian buyers or Canadian homeowners sell in places where they tend to spend the winter to get away from the cold.
Yeah, I don't see them coming so much to New York. They're probably going down more to Florida. But, people love New York. I'll tell you what I saw a lot of in the last 2 years was a lot of people from the West Coast coming to New York City. People sort of my age and older, like 60 and above, whose children have decided to settle in New York.
So they follow their kids out here.
Correct.
That makes a lot of sense. For those who are relying on borrowing money to buy homes, we know that the 30-year fixed-rate mortgage kind of stands at around 6%, 7%, which is painful for a lot of people. Yeah. Are they increasingly looking towards 15-year mortgages or adjustable-rate mortgages in hopes that they'll be able to refinance later on?
Absolutely. People are looking for adjustable-rate mortgages, hoping that they have some flexibility. I'll tell you one thing about the interest rates, though. What I have found in my career, that's been 27 years now, so I've seen a lot of ups and downs in almost everything, is that the first year or two that interest rates go up, that's the worst for us because people have this sticker shock. And so when they went from 3% to 4 to 5 to 6, that was really, really bad because people have very short memories. What has started to happen in the last 3 or 4 months is people have the sense that this is the new reality. Yeah. And for people old enough like me, we remember when 6 and 7% wasn't so high. So I do think people are not as freaked out by the interest rates as they were in the beginning.
Yeah, that makes a lot of sense. I know that in high tax states like New York, Connecticut, New Jersey, people are looking ahead to whether there's going to be an increase in the assault deduction. And this is something reportedly that our elected officials from the states that I just mentioned are working towards. Do you see people holding off on making purchases until that goes through, or does that not factor in?
I haven't really seen it. Again, you know, the luxury market's a little bit less sensitive to those types of things, and New York City is very unique in that way. It's also sort of been baked in that we didn't have the SALT deductions for a while already, so people got used to it. I think that if we end up back with the SALT deduction, that might push somebody over the edge. But you know, the fact is that one of the reasons why people continue to buy, and that's happening right now, is that rents are very high and people have to live someplace. So if you have 2 to 3 kids and you're in a 2-bedroom apartment and you have to move and you're looking at the option of either renting or buying, the rents have gotten so high that has pushed people into buying.
Interesting. All right, we got to leave it there. Lisa, always a pleasure. Thank you so much for joining us.
Thanks for having me.
Lisa Lippman with Brown Harris Stevens, talking us through the real estate market, particularly in New York.